Hello and welcome to the channel. Today I want to bring us up to speed with where we are in the bull market right now. You must have seen that there has been a lot of FOMO in the markets recently. Now, I have already explained this in another video and I will leave a link to it down below, but it's right that I mention it again before you go into a crypto that may not perform in the short term. I have mentioned this before, but it is good that I expatiate on it again. Money leaves from here, that's regular money fiat, goes to Bitcoin, from Bitcoin to large caps, from large caps to mid caps, and from mid caps to low caps, and further to micro caps. Now, what is important to note is some meme coins are also large caps, which means the likes of Doge and Shiba are also large caps. Now, usually, these meme coins pump the last in a bull market. This is because investors would have made profits in utility coins and then they can invest in these meme coins just to play around with them. There are a lot of people who took out funds from their utility coins and invested in meme coins. Notwithstanding, you could make some serious gains, but it is a very big mistake to take out funds from your utility coin to invest in a meme coin. The reason for this is because crypto follows narratives. We have all seen what happened with the Decentraland and Mana and Akona, all of these metaverse cryptocurrencies, because of Facebook's interest in creating a metaverse. So let's say you've been hodling a coin for a very long time and you saw that other coins have been performing. You take out your funds from this coin that you've been hodling and go invest in another coin. The narrative can take just about a minute to shift direction. For instance, let's say you're invested in a supply chain cryptocurrency and there is some problem that can only be solved by a supply chain cryptocurrency. Now in this example, let's say you're invested in VeChain and you've been hodling it for 10 months. Let's just say that the need for a supply chain crypto wasn't there for 10 months, which means the demand for the VeChain coin wasn't there. This will indicate that your investment won't really do well. But you've been hodling for 10 months. And let's just say after 10 months, the need suddenly arises. This will shift the narrative of the market entirely into supply chain cryptocurrencies, which means VeChain will perform and any other crypto that is a supply chain crypto that has good tokenomics and good, say, founders and all of that will also perform. But you sold out your VeChain because you saw that another crypto was outperforming VeChain. So now you understand why you should not shift portfolios without hitting your target. Before creating a crypto portfolio, make a target first. Dissect the coin or token that you want to invest in and make a target for it. When you do your research on any crypto and you're about to invest in it, you need to do an estimate of how far you think that crypto can ever go. This estimate will allow you to hodl that crypto until it reaches that target or until it gets closer to that target. So this is for how far up you think the crypto can go. You also need to do a stop loss, even if it is just a psychological stop loss. This means if you're investing in a crypto and it's at $1, you need to know exactly how much you are willing to lose. And by that I mean, if you invest $1,000 and you lose $500 and you are convinced that it is a risky asset, it will be wise to stop your loss. Some people will let the $1,000 go down to $500, which is not a wise thing to do, but it depends on the type of crypto you are investing in. If you're investing in a cryptocurrency and you know that it is an extremely risky investment, then your stop loss cannot be 50%. So when you do your research, have a psychological stop loss and have a price estimate before you invest. Now, when you've already done your research and you're waiting for the price to go up, it is not wise to take out those funds and go to invest in another crypto because you think it will go up first. This is one of the biggest ways people lose money in crypto, by taking out investments from cryptocurrencies that weren't performing and investing the money in other cryptocurrencies that you hope will perform better. The funniest thing about this is when you take your money out from the crypto you've been hodling for a long time, it is very likely that the moment you're taking out the funds is the moment that crypto will go up in price. So no financial advice, but this is not something you would want to do. Anyway, this is the Wall Street cheat sheet. It shows the market cycle psychology. I will show you the Bitcoin chart in a moment and you will realize that it looks somewhat exactly like this. So you can see here that we start with hope. Now, this is the psychology in the markets when the cycle begins. And that psychology is this rally will fail like the others. This is exactly the mentality in the markets when the cycle begins. And this is also true for other asset classes like gold, stocks, and forex. And so when we leave from hope, and here at hope, you'll see that a recovery is possible. We go to optimism, where people are optimistic about the markets. You can see here that the psychology is this rally is real. And I believe this is where we are now. This is the mentality in the markets now. When we leave from optimism, we go to belief. And this is where many people start thinking of getting loans and mortgages. And from belief, we are in thrill. This is where everyone is fully pumped, taking margins on their trades and sure that the markets will continue. And from thrill, we are in euphoria. And you can see there that the mentality is, I am a genius, we are all going to be rich. Now, the problem with this is that people think at this stage that the markets will continue to go up. And so this reasoning makes other people take out more loans and invest at this point. Now, this is a very big problem because it will take another market cycle before you ever get back here. Which is why I always say never invest money that you are not ready to lose. Because the problem with all of this is that you never know at what point in this rally we are in. For instance, I can say that we are here at optimism and actually we are here at belief, or we could as well be here or here. Now, quite frankly, I do not think we are in euphoria yet, because here you will see the news talking about it. Everyone will be talking about making a lot of money, except me, of course. I don't do that. Just so that you understand, in crypto, the bear market will last for 2 years, which means if we have a bear market, which we will have, well, it's a very high possibility, we might have a bear market next year, 2022. And so the bull market may only return in 2024. So that's 2 years of a bear market. As we go into the rest of this bull run, many people will look back and say, if I had just taken a loan and invested here, I would have made a ton of money. The problem is you never know what part of this we are in. You never know. We may be here and you will not know. So if you invest here, it will take 2 years for you to get that money back. Now, this is also depending on the crypto you are investing in. This is assuming that you are investing in Bitcoin. If you invest, for example, in a very low cap cryptocurrency, that crypto has a very high chance of not making it to the next bull market. This is something that you should always remember, because it can as well die in the bear market. By die, I mean it may go to zero and say the developing team just abandons the crypto and it completely dies. I'm bringing this up because I know that I've been talking about Stratos, which I'll leave a link to my video about it below. But I think Stratos is a very good cryptocurrency because it presents a lot of great fundamentals. But it is still a very micro cap crypto. To fully expatiate, micro cap means that it will take just a bit of money to crash its price. Remember, the lower the market cap, the higher the risk and the higher the reward. So, as we can see here, this is the next psychology that pops up in the markets. We just need to cool off for the next rally. This is exactly how people start to feel when the price has dropped like this. So that is that for complacency, and then we come to anxiety, where you have the psychology of why am I getting margin calls? Now, this is for people who took out margins on their trades. They are being liquidated. And then we drop from anxiety to denial to panic and then to capitulation. And capitulation, people are like, I'm getting 100% out of the market. I can't afford to lose anymore. Now, if you had, say, a stop loss, a psychological stop loss here, you would have gotten out of this market here. And so we see that this is not something we will want to be in. This is something we will want to be in. And then we go to anger, to depression, and back to disbelief. So after disbelief, we will have hope. And so in disbelief, people will be like, this rally will fail like the others. And so this is the psychology of the market cycle. Now, it's important to note that this is mostly controlled by institutional investors. Retail investors are mostly the ones that get dumped on in a market cycle because they don't understand this. I am bringing this to the channel and talking about this because I do not want any of my viewers or followers or subscribers to get dumped on here, which means I will be making intensive videos in the next coming months because this might happen between January to June. So I will not want any of my followers or subscribers to get dumped on like this. I did mention in one of my videos that I will be taking profits as we approach February, and someone asked why. It is because of my understanding of this market cycle. It is needless to invest now and you're hoping to take profit, say in 5 or 10 years, when in the next year your investment may be down by 50 or 90%. So all of my investments now, I consider them temporal. I am not doing any long-term investment now. In fact, I am swing trading. So I invest, when I meet a target, I take some profits. But overall, I consider all of my investments temporal because by February to March, I should be 70% out of the markets. At the time of making this video, this is how Bitcoin's chart looks like. You can clearly see the similarities between Bitcoin's chart and this other chart. You can see disbelief, hope, optimism, belief, thrill, and euphoria. We then descended here and it's playing out the same as here. And now we started again at disbelief, came here at hope, crashed again here, same as here. So I'm thinking that we are here, just about to have another crash. So this crash here is somewhat the same as this one here. Now keep in mind, these are just my own opinions. It's not clear or it's not finite that it is this way. This is just the way I am seeing it. We might as well be here and we are about to take off. So what I think is this crash here or this correction here is the same as this one here. And where we are here where we are here is exactly here, just about to have another crash, or maybe we have not fully reached this top. So when we will reach this top, which I think could be $73,000 or $76,000, but I am most certain that it could be $73,000, we could crash again. Then when we come here, we take off. Now we may as well be here and we are about to take off, so do not take this as gospel truth. But you can see clearly that Bitcoin is following this chart. And if Bitcoin crashes, every other coin will crash. If Bitcoin goes up, every other coin will go up. So crypto in general is following this chart. Now, I've talked about many coins on this channel, but what I want you to understand is any coin that is below $50 million as market cap is a very risky investment. That is what I want all of you to understand, or anyone that is watching this video. Any coin or token or any crypto that is below $50 million as its market cap is a very risky investment. You are literally playing with your money when you invest in a crypto that is under $50 million, because it will only need $50 million to double in price, and it also needs only $50 million to crash completely. So all the coins that I've talked about on this channel, or any coin that you see that is below $50 million, only invest what you literally will have no problem losing, because your money is at risk when you invest in a micro cap crypto. Now, the ones that I target, like Stratos, that I've always been talking about, and I talk about it in almost all of my videos, I only talk about it because I am very convinced in its fundamentals, and it also has very strong partnerships.